Hi guys, welcome back to another episode of Singaporean Talks Money, and do hit the like button, subscribe to my channel if you like to show me some support. So today I'm going to talk about Robinhood's IPO and how they managed to change trading or investing. So Robinhood has been the trading platform being mentioned in many news as it attracted youths to create accounts with value as low as $100, which most traditional banks or brokerages do not accept as customers as the funds are relatively too low. So Robinhood also filed for IPO on March 2021 and is set to go public in July 2021, which is pretty soon. So before we talk more about it, let's find out more about Robinhood. So it was founded by two Stanford graduates, and I've seen Vlad appear in numerous videos, especially after the GME saga, where trading was halted and they had to explain why it happened. Robinhood was created in 2013, starting as an app for trading stocks, but was soon pushed out by Yahoo and Google Finance. So they pivoted into a brokerage after receiving some funding. So the main thing was that the pandemic pushed Robinhood into the limelight, which are some, below will be some information that I'll be talking about that I saw from a video that talked more about Robinhood. So what Robinhood provided was the ease of creating an account to trade or invest, where every aspect of the app was created to make the experience exciting, from the fonts to being able to slide your finger across the graph and see the prices update. It attracted many users as the criteria to join was easily fulfilled and setting up was easy and simple. It was also mentioned in the video that even today, with its popularity though, the median account size was $240, which is mind-blowing because usually a lot of people think that you would need a substantial sum of money to start investing. And in 2019, they had about 10 million customers. So one other attractive point of Robinhood, besides the user experience and low criteria to start an account, is the commission-free trading. I mean, there has been a rise in low-cost trading platform, but Robinhood is definitely one of the pioneers. The pandemic accelerated the growth of Robinhood as most people had to stay home, where there was a surge of interest in investing, especially with the stimulus money being sent. So with these large numbers of sign-ups, Robinhood had to find a way to monetize the audience. And with social media platforms like Twitter, Reddit, and TikTok, the spread of information can go far and strong. With Robinhood having a collated list of the highly traded stocks combined with the communities discussing on stocks, the young generation can invest at the snap of a fingers. Unlike our parents, where investing involves a broker and usually requires some time. And in the past, officers in Wall Street runs on news or what we call narratives, which are memes now, by passing on rumors on the next big stock. And usually those news were only in the Wall Street area over the phone. But now social media platforms allow such information to spread. Next, let's move on to short sellers, and I really like the stock. So Robinhood is a platform for retail investors to easily buy what they want without having too many criteria to fulfill. I'm sure short selling, GME and EMC has been covered quite extensively, so I won't go too deep into it. But when Melvin Capital, a hedge fund, lost billions after the epic squeeze by Reddit traders, the retail investors knew they have managed to find a way to go against the institutions who have all along been using ways to earn their share, and also bailing themselves out during times of crisis like the 2008 financial crisis, where institutions could pay a fine while retail investors lost their lifetime savings or are required to pay for what the financial institutions cost. So all went well for Robinhood until they had to tweet, "In light of current market volatility, we are restricting transactions for certain securities to position closing only, including AMC and GME. This means that you can only sell your stocks but couldn't buy more." This of course triggered anger among its users, who were a huge following against the hedge funds, and not being able to buy was like stopping them in their fight against the institutions. So let me share a bit on my thoughts. So Robinhood actually had a pretty good reputation originally for the ease of using and onboarding. And I'm sure many who wanted to start investing created an account with them. However, after the GME and AMC buying haul by them, it was seen as a huge hit to their reputation, as there were conspiracy theories that the hedge funds were the ones who asked them to halt trading. But of course, the CEO clarified that it was entirely about market dynamics and clearinghouse deposits requirements as per regulation. Robinhood still remains the easiest brokerage to onboard in the United States if you have a low capital, and I'm sure many people are looking out for its IPO. It also allows cryptocurrencies to be bought, which is really convenient because you can have all your stocks and cryptocurrencies in one place. Although it is easy to onboard onto Robinhood, they do have certain restrictions. For example, if you were to buy cryptocurrencies using Robinhood, you are not able to transfer it anywhere else. This makes you lose out in terms of interest that you can earn, and also safety, as your cryptocurrencies depend a lot on Robinhood's infrastructure. So all in all, it will be interesting to look out for this IPO, but I don't think I'll be initiating any position on it. So I hope you guys enjoy the content that I've been putting out, and do support me by subscribing and liking my channel. Thank you. Goodbye.